Good morning, good morning. Welcome to the breakfast show. I'm your host Martin Wong. And today, trading idea with SMARTRobie, we will see the sectors that hasn't been beaten down yet. So stay with me as we go through the much needed sectors which currently staying afloat despite what we see, the sell-off that we had last night on the US market. Now that's right. Now let's take a look what we have for you this morning. Now we all know last night we have the big sell-off that we see in the US, and if you look just above me, switching to a wider chart, it's no surprises that you are seeing a red pentagon. That's right. You can see on this side on our chart there on top, the KLCI has registered a red pentagon, and that is going to be very bearish as the market has already hit double top. We can see the 1560, and the market is likely to come back and retest. And this morning, no doubt, you can see some big sellers are Inari, down 3%, Top Glove is down 3%, Hatta is staying afloat 1% in here, and the market currently is down 12 points. That's right, it's down 12 points already. So we are seeing the market is going back down as we see the interest rate hike, which we will cover in our talk here. Now let's go on to our headline as we have. Now do take note, today is our Pentagon Guider intermediate. So we'll be talking about the stage 2 shares that seems to be going higher, and no doubt many of these are actually correcting right now. And but let's take a look at our news roundup headline. That's right. Now, news roundup headline is by the Edge CEO this morning, talking about the likelihood, again, likelihood not confirmed yet. And a lot of the economists, as I said before, they like to repeat what is going on in what's happening in US. And many times we investor or we trader also must look at the US market. So as I said before, if we see trend is already turning in technology or in oil and gas or in finance in the US sector, that is likely to happen yet. If the economists are doing it, why shouldn't we? And the same in this article, in this headline, the BNM, Bank Negara Malaysia, seems to be wanted to raise the overnight rates by 100 basis point. That means 1% lah, 1.75 to 2.75 between 2022 and 2023. So that means there are likely to be 5 interest rate hike or 4 interest rate hike, depending how you look at it. So again, 25 basis points, so 0.25 they raise and then they raise. But do take note, the only time Bank Negara has raise interest rates for only once, and I doubt so that likelihood that Bank Negara will raise interest rate this high and this fast. So take note of it, maybe just 1 or 2. I doubt they will raise the kind of 4 or 5 interest rate that we are seeing in US. All right. Next headline is on the technology sector. Now take note, the technology sector has sold off that we've seen so far this week in US, and the same is going for the local market. But like all, I still like the technology sector despite of the interest rate higher. And we all know when interest rate is higher in future, the generated so-called interest or revenue or earnings will seem to be low. Now that is all in the perception, and again, because of this perception, the valuation, everything is been taken a hamper and taking a hit. And like it or not, markets like to correct, and correction is actually a good point where some of you who are longer term looking into buy at the technical setup, like with double bottom, with a Pentagon turning green, okay, and market stages just about turning into the above zero line. So those are the things that you want to be working on. But in this article, simply enough, Inari seems to be the top pick by the research house. So let's take a look at Inari, how much it has fallen, and switching to the SMARTRobie in here. Inari. So you can see from here on the stock chart, Inari has fallen more than 20%. And today, after the blue candlesticks, that was the one that is stopping. It's been down 8 days in a row, and yet right now, right, this market continue to go down. But I think the bottom is already there. We just need to see one more climatic change, and perhaps you see a little bit more on that one. So the favorable recommendation by UOB Kay Hian is that it has a superior 3-year net profit compounded growth of 35%, and it's also banking on merger and acquisition. So that is why longer term Inari seems to be a growth stock in the eyes of the analysts. So right now it is an opportunity, as I said before, but trader and investor beware. Just know of the entry point where you want to be buying, waiting for the green pentagon before buying, and the trend seems to be down, maybe following some sort of double bottom setup. It hasn't formed yet. You only have one leg. You need the second leg. All right, let's look into our next story. Now, next story is on the confidence of small cap stock remain to be good as they are playing into the economic recovery, technology space still around in here. And another report by RHB Research advocates several key investment themes, including exporter, value stock, and election play. Now, remember, we've been talking about election play. Now, election need to be before July 2023. Keep in mind, July 2023. So from today onwards, for the next 1 year to or another 6 months, 18 months, we'll be talking about election play. And that seems to be the kind of theme people are talking about. You can look at the UMNO list that we have in our watch list. We can also look at the Sarawak play watch list, and some of the RHB Jewel seems to be also doing not too bad too, right, depending on the sectors. So against this backdrop, the brokerage houses is recommending consumer discretion, technology, logistic, oil and gas, commodity play, and political link thematic play like the CMSB, all right, and some of the Sarawak like HSL. Those are the stocks that you see in me. So let's take a look at HMSB, okay, which is the Chaya Mata in here. And you can see it is also turning red pentagon. Just up me switching to a wider chart, and everything seems to be turning into a red pentagon. So investor, trader, you need to wait for the right time to be buying. And if you need to cut loss, you probably have to cut loss. If you are a shorter term, longer term, you might want to look at the overall corrections and how much kind of correction you can take by looking at the diversification of your portfolio. Having said that, that is always been the manner to try to have a longer term on this market. As I said before, the Malaysian market will continue to hit mainly to the sideways market, looking for a lot of catalyst but foreign funds are coming in. If you look at the foreign funds, let me just switch back to here, the main chart here, and you can see foreign funds are actually buying, and you can see the green pentagon in here. But guess what? The foreign funds may just be buying some of the financial sector, and you can see the tech sectors will continue to sell off at what we did. All right. Let's look at the next news headline. Now the next headline is on DNeX. All right. So you notice DNeX is having a strong footing on energy and chips, so outman well. So this is the very interesting counter in here, DNeX, which have chip manufacturing or chip foundry, yet also have a foothold on energy stock. So it's about having exposure on this too. So in one way, if the energy sector does better than the tech sector, it has some sort of balance. So you look from here onwards, DNeX is well supported and hitting a slight resistance at the top inside there, and you can see it is at 91 cents. After it fell off from the old high, you can see it is holding up. And let's take a look at this morning here, DNeX. It is up 5%, right? Because of the news that we see in here, trying to break up to the. So not all is lost, and it has a respective CAGR growth of 32%. All right, 32% in here after acquiring 60% stake, and they are giving it a buy call at 135. Now right now it's only at 91 cents. So you will see this would have a potential another 30% upside for the research house who giving it a buy call at 135. Okay, let's move on to our next story. Now next story focus on Genting. We know that Genting is been hidden by headlines such as the defaulting and on the German shipbuilding, and the German shipbuilding is owned directly by Genting Hong Kong. So in this case, Genting Hong Kong is seeking a court assistance to safeguard, right, its asset after failing to secure funding to pay the debts, and such that the amount we are talking about here is 2.8 billion. 11.6. So at one point, this doesn't look very good on Genting, likely to default and looking to seek more fundings, more investors, pretty much like what Asia did when a company that goes on empire building and goes into a lot of debt when a market takes a turn, like we've seen in the COVID and similar in this COVID, there you will expose a lot of the weaknesses that the company have, and such that the shipbuilder have 2,900 staff, some of them will deem to be so-called remove or relief as the shipbuilding undergoing consolidation that we've seen so far. A lot of the shipping as well as sea travel, cruise liner are facing huge difficulty during this COVID-19 here. Now let's take a look at Genting. Now having said that, Genting has probably priced in a lot of these stocks, and no doubt this is already been factored in on Genting, and that's why you see what we have here. Genting falling off, but had a green pentagon in here. But today is likely to fall some more. And just fall slightly 0.4% on this news Genting. But it's Genting Hong Kong, so not likely to affect the Genting Malaysia in here. But the resistance is already there, but it is still in a blue trend zone in here. Hopefully it can resume back its trend. Now let's turn our attention to the US market. Like we seen yesterday, the big fall that we have last night in the S&P 500. So last night we have another big fall, which was down 81 points. Okay, last night 81 points, which is the 18th of January yesterday, and right now you can see it is what it is. Red pentagon in here. Now this correction has turned much worse off because of the analysts. Again, many of these medias and analysts is looking for 4 interest rate cuts, okay, rather than 3 interest rate cuts. They are looking at 4. It may be worse off, and that's what we are selling it. But in my opinion, I always think that the market will dust its correction, maybe sometime even more than 7-8%, depending how is the likelihood of the media taking into it. Now remember, the meeting minutes and US FOMC hasn't anything talk about raising interest rate, likely to be much. All these are based on speculation of analysts. Again, just like what they think it is, then the market will simply take a compounded blow, and why we saw a big sell-off that we have. But having said that, I do think that the corrections is very, very close to ending. Right, it could go down another 3 or 4 more percent. Be prepared for that, but it will continue to form. Always look for the technical setup in here if you want to go long. Else, trends is still pending it down. The trends are looking to be lower than ever. Okay, but I do think that this is not a big recession or big market crash. It is merely a correction, which I did talk about in length in many of my talks in here. Now let's go over to another stock, which is a Microsoft, which is in the talking point. Now Microsoft is looking to acquire Activation, another game player, which have a lot of fans, but the proposal of worth 68.7 billion has analysts cheering, but there's a concern that need to come is the regulator. And no doubt Microsoft is undergoing correction too, just like any technology stocks in here, and it's not done yet, but that seems to put Microsoft in a stronger position overall in here. You can see you have a sort of moving sideways to the downtrend, but the downtrend is already confirmed, so that's why we are breaking it down here. We have to wait what sort of news that will be coming out from the analysts and also the US FOMC before this market will reverse out. But right now what we are seeing, it is definitely downtrend. So US market, Microsoft is correcting too. Now on the Singapore side, let's take a look attention now to the Singapore side with SGX. I believe SGX will also turn very, very soon. right? Let's look at the STI market in here. Not yet, but we did see right now a 1-bar sell-off that we've seen here. So no surprises if we go through this market, okay, today or tomorrow turning red pentagon. All markets all follow on. S&P 500 already turned red, and this Singapore will turn red pentagon very, very soon. So once you're used to seeing this kind of trend turning red to blue to red to green, yellow trend zone to blue trend zone, you'll see why this market will have its ups and downs, and understanding that will definitely be a better investor. Longer term, the trend will definitely go higher, but you need to be very, very selective with the sector as well with the stocks in here. So judging from here what we've seen so far, we have a lot of penny stock that is moving up. The bonds are doing pretty well, up 3% here. The big decliner are some of the ETF stocks in here. And the stocks that we are talking about is SIA Engineering, which is from business time. All right, let's take a look at SIA Engineering. And it has a code of S59. So F59 is right at a very nice base, supported at, what price is this? 220. It did have a green pentagon, but immediately after the green pentagon, the market came back down and continued to congest and reaccumulation. Okay, so we still have to wait yet, not ready to break higher, as we can see in here, because of the choice of the bearish news they are seeing also in the US market, right? The nice market recovery we can see on the 7th of November. So again, the Omicron does come into play, but I do think that we are very close to the bottom, and once the economy start reopening like what we're seeing, learning to live with Omicron, we are seeing cases has dropped a fair bit also in UK, so that is likely to proliferate to many of the country, and also South Africa, which have reported the first Omicron, has already seen a downtrend of falling Omicron cases as well as hospitalization. Once the US price in this kind of news, you can see many of the stocks will kind of return it back. It always seems to be desperate in the times of where we see fear right now, right? If you don't have fear in the market like what we have, then you're likely to be a very, very good investor. When you have fear, that is actually a good thing. Learn to see the fear in you and able to look at the chart and be very, very rational and conscious about the decisions making and everything. I think all we can do is not let fear overcome our decision making, else we only can become a bad investor and a trader. All right. Let's move on to our next revisiting our immediate trade idea. Now MBSB, last week that we see, right, some of these stocks, and one of the things that I've done is to put them into the watch list. Okay, so you can see right now at the watch list we have the stage 2 January shares here, and now we have Hector. All right, let's take a look at Hector. Now you notice first thing is the specification of these stocks that I did not get the tech stock. So Hector is more of an industrial product, still going up in a nice trend in here, right? So keep up with it. MBSB is the financials. We all know financials are doing well, right? Except we have a correction right now here, small one in here, because every time when you have this kind of hitting the top resistance about 60 cents, the market will generally pull back. Right, no red pentagon yet, and Costa, which is the oil and gas. Okay, so Costa hit a high and then came back down, and so that is again inflation play, with the inflation going up, commodity going up. So this stock seems to be doing well. So for this week, the stock in talk is, right, the financial. We have Takaful, M Bank, and RHB Bank. Okay, so let's take a look at I think M Bank, we talked about it. Let's take a look at Takaful, which is an insurance play here. Okay, Takaful has turned red pentagon already. You can see 13th of January, right? That was the stocks heading higher, and but we have the red pentagon turning down already. So this trend seems to be broken out. Let's look for another one. M-Bank. Okay, M-Bank, we corrected in here, has gone pretty much high in up here. So we have to look for something that has not gone up that much. Let's look for ABMB, Alliance Bank. Oh, this one is also gone up a fair bit, and they are correcting 4% today. So the banks are correcting today in line. They're taking quick profits. Let's take a look at some other sectors. Going to KLSE sector, going to Robie chart, and going to ST2. So one of the things that you want to look at is look for the dates, okay? The line change date, okay? The market stages is actually a line change. 13th of January, 13th of January, 17th of January, Armada. Okay, let's look at Armada. Again, an oil and gas player. That's a nice one. Armada continue to go up. So that's the stocks that we won't be there. So let's go back to the watch list. Okay, and we'll put in Armada into our stage 2 shares. So we add that one in here. All right. So once we got the Armada, we'll look at the likelihood of the weekly resistance where we might want to take some profit, and also our stop loss point. Okay. So let's go over to Armada. Okay. Hit Armada here, and what we want to do is look at the trading plan. So trading plan here, Armada, we are looking at 58 cents and 481. So Armada 58 cents or 545, which is the old high here. That is only giving you a 4 or 5%, which is okay. I think it's okay. So we'll have 545. Okay. And how about the support? All right. If the market were to go down, that's where we are. So we'll look at the exit plan. And the exit plan, we are looking at weekly support at 47 cents. Weekly support 47 cents. If you look back, this is this point here, 48, 47. Yeah, that's not too bad. All right. So with that, we just go back to the watch list. We know together with our stage 2 shares, and we are looking at Armada. Remember, we want to be with a stronger trend, and right now for 2022 we know that finance and energy sectors are the one that seem to be doing well. So we will edit this so we can see Armada. So the first one is 545.545 and the low is 0.47. So hit that one. So this will be our exit and stop loss. Okay. There you go. So we save that, and definitely you can see. So whenever the stock price hit during the intraday at 545, okay, that you see in here 545, right? And it hit the low side 475, you will be notified of this in here. Coastal, you can see now is down 2%, MBSB is down 3%, and Hector right now is down 2.5% because this stock has gone up a fair bit. So, but Bumi Armada is now doing its course here, picking up. Okay, and if you have gone in much earlier here at 45 cents, you already be at least 15% in the money by following the green pentagon. Always right now, there's no choice. You have to do the rotational play. So set up the upper and lower bound alert on your watch list. Okay. And this is to reactivate the watch list, and you'll get all the market monthly pass to access the watches. All right, for this tonight, we have a special talk. You can still register. It's a free talk tonight. It's to showcasing our Trade VSA 360 that we presented on every Friday 10:15 onwards. Is to showcase to you how we intend to use our tools to access the market, looking for opportunity and looking for risk and what are the sectors in here. So tonight will be the talk right on the bull and beat the market with sector analysis and market stages. So we'll be looking at sectors. I'm going to showcase you some of the sectors that we talk about in here, and definitely look at ways how to maneuver this difficult time. No doubt the green pentagon has turned to red pentagon for the KLCI, but there are still some sector available, so we'll definitely use this sector analysis for that one in here. We'll also be looking at US market too. So what are those sectors seems to be doing well for it tonight. So join me tonight at 9:30. The Zoom link is right at below there, so you can register for a Zoom link, and this will be a very special Trade VSA showcase on the next 3 nights, the 19th, 20th and 21st. So I'll see you tonight, right? So of course our intake for February 22 for 3-day masterclass is open right now, and this is one of our very popular course that we do over the last 3 to 4 years in here, and it continues to make many of our members to be well aware and to be in a way very profitable and consistent to be a market. It's not going to be easy. There's a lot of challenges in here, but the coaches and myself with our vast 25 to 30 years experience in here to guide you through this challenging time in here. And definitely the US market does present the best opportunity right now. All right, now we're going to head on to what we have usually for our stock review right now. So if you have any stocks that you want us to look at, do let us know. Okay, do let us know in here any stocks that you want to look at. And if you have not given us a review on our SMARTRobie and Google Play Store, please do so, and we are happy to answer any of your questions that you all have regarding it. But I do hope that our morning session that we have has given you some sort of a guidance and clearance what we are likely to see right now in the market. All right, and don't forget to subscribe to our YouTube channel for all our up-to-date breakfast show and also some sector analysis and talk that we have so far. And don't forget to share our Telegram chat room that we have so far. So if you have any stocks that you want me to look at, do pencil those in. I'm happy to look at them now. And don't forget to join us tonight at 9:30 for our session, Zoom session on market stages, sector analysis, both in the Malaysian market as well as the US market in here. Okay? So if there's no stocks to review, right, many of you are okay. Remember, if you need to cut, you need to cut, okay? Right? If those of you who in the longer term, you might want to ride that in the longer term and look at other indicators like our weekly Pentagon charts in order to see whether this is actually a good opportunity, whether you should take some profit, let it run, and so on and so forth. Please, very important is to have a trading plan. We are going through very difficult time, and you already know as the KLCI already turned red Pentagon already. All right, take note, and I'll see you later tonight. Bye.